What's up, guys? Welcome back to the channel. So today is going to be episode 124, and today we're going to be taking a look at two little known tech stocks that could potentially double your money in the long term. All right. So first up on the screen here, we have a company called AppLovin. As you can see right now, pre-market, it is up almost 1%. And if we go ahead and we look at it year to date, AppLovin is up 107% year to date. Over the past year, it is up 244%. 5 years, it's up 16%. Max time, it is up 16%. All right. So not a lot of people are talking about this company, and I wanted to pass that information on to you. All right, so it says here, AppLovin Corp engages in the development and operation of mobile marketing platform. It offers app discovery, Max, Adjust, and Spark Labs. Its software-based platforms caters to mobile application developers to improve the marketing and monetization of applications. All right, so they're pretty much in the app development business. They are in the business of helping developers get their apps out there and helping them monetize them and getting them maximum exposure. All right. So company here, CEO, this is the guy, Adam, employees, 1,700, and it was founded in 2011. The market cap on this is 26.59 billion. So it's not exactly a small company. Its 52-week high is $88.50. So now we want to go ahead and just hop over to their website. Well, actually, let's go to Wikipedia first so we could just get some basic information on them. All right, so here it is. We have AppLovin. It says it's an American mobile tech company headquartered in Palo Alto, California, founded in 2012. So Robinhood said 2011. This says 2012. Who knows? It operated in stealth mode until 2014. So let's go back to Robinhood real quick. Notice something here, right? So year to date, up 107%. 1 year, 244%. But notice when you get to like the 5-year mark and then the max, the percentage just really seems low. Apparently they were in stealth mode during that time frame. I don't know. So it says here, AppLovin develops all sizes, enables developers of all sizes to market, monetize, and analyze and publish their apps through its mobile advertising, marketing, and analytics platform. And it goes on to say here, app discovery, Spark Labs, AppLovin operates online studios, which works with games developers to promote and publish their mobile games. AppLovin also has large investments in various mobile game publishers. In 2020, 49% of AppLovin's revenue came from businesses using its software, and 51% from consumers making in-app purchases. Wow. So these guys are printing money, man. I like companies like this. I actually love software companies because it's kind of like it's kind of like royalties. You just create something and then you just sit back and collect continuously, So I love anything to do with software, especially if you're pushing as like software as a service, in-app sales, that type of stuff. This is really good. So this is their website. It says AppLovin, connect with your ideal audience. And, I guess that's some type of testimonial here. And then it says here, our technology fuels the world's most innovative business, including Headway, Rollic, Voodoo, Triple Dot, Yelp, Shein, Headway, So it's just helping, these developers get their apps out there and get them monetized. So it says here, app discovery, scale your growth with our AI-based advertising engine. All right. And it says here, maximize your mobile app's monetization potential. Spark Labs drive marketing results with top performing creatives. And then if we scroll across here, it says ALX, access the leading programmatic exchange array, create more value across your customer's life cycle. So it just seems to go on and on and on and on. But pretty much, like I said, software company catering to developers. So this is definitely like a business to business module primarily. However, it does make money from customers doing in-app purchases as well. I personally have never really heard of this company until I started doing some research. And the whole purpose of the research was to, try to find at least 2 or 3 tech companies that was priced under $100 a share and that had a return of over 100% for the year. So this company meets that criteria. I have 2 for you today, and then the other company also meets that criteria. If we go ahead and hop into TradingView and we take a look at AppLovin here, this is the ticker symbol APP. It's on the daily chart. I set up a recent support level for you guys, which is at 71.97. And then we are finding resistance somewhere around here, which is around 88 to $89. That seems to be the resistance area. If it does break above this area, obviously it's going to be charting into new territories. I would just, keep a watch on this. But if you're looking to potentially double your money, get some gains, this stock does not look to be a bad stock to consider investing in. You could go ahead and go in Robinhood and set your alerts on this. As you guys see, I have an alert here set to say if it goes above 89. All right, but this company does seem to be moving. I'm not exactly sure what they mean by it being in stealth mode, since up until 2014. So I don't know if that was around the time that it started moving, but seems to be moving pretty good. See, 1 day, 1 week, 1 month, right? 3 months, all green. Year to date, green. 1 year, green. The 5-year mark is when you get to that kind of like sketchy area. All right. But so I don't know exactly what's going on there. But if they were in stealth mode, let's say they became active in 2014, then 2014 to now, that's 10 years. So I'm not exactly sure. But the company does seem to be moving. Like I said, you could put this on your watch list and figure out if it's something that you want to invest in. But I just thought I would throw this guys your way. It seems very interesting to me. All right, let's hop into the next company. All right, so the next company we have here is called Celestica. All right, so Celestica right now, today, it is up 2% pre-market. We go for a week, it's up 10%. The month, it's up 16%. 3 months, 37%. Year to date, 110%. And over the past year, 322%. So these 2 companies seem to be moving. All right. They also have options available on them, as you guys can see. I've also set an alert on this just to say if it goes above the 61 area. All right. And if we go ahead and we scroll down here, just gives you some basic information about what they do. It says here, Celestica Inc. engages in the provision of supply chain solutions globally to equipment manufacturers and service providers. It operates through the following segments: advanced technology solutions, connectivity and cloud. The advanced technology solutions segment includes aerospace and defense, industrial, smart energy, high tech, and capital equipment businesses. So this is another B2B business, which is probably why you don't really hear about companies like this too much. It's not a popular company. It's not like a big retail company, but there's a lot of money to be made in these B2B companies. B2B meaning business to business. So this company just has a product or a service that they primarily just sell to businesses. They could do that with phone calls. They don't necessarily have to advertise on TV. Yes, Nvidia now is primarily a B2B company, I would say, but it was known initially as a company that made gaming cards for retail, for retail. They would sell to the end user. All right. So these B2B companies, like I said, are usually hidden gems. All right. So here we go. We have this guy, Robert. He's the CEO. Big company, 26,000 employees. Market cap, though, is a lot smaller than the other one. This is only 7 billion, and it's headquartered in Toronto, Ontario. So let's go ahead and hop on over to the wiki on this and see what it says. It says Celestica Inc. is an American Canadian multinational design, manufacturing, hardware platform and supply chain electronics manufacturing service company headquartered in Toronto, Ontario. The company operates in 50 sites across 15 different countries. So this company primarily, their business is, I guess, helping make the process of like supply chains more efficient. They're doing this through cloud, and other types of technologies. This is another company that popped up on my radar again because it meets the criteria for this video, which was a stock that's priced under 100 per share and has a gain of over 100% for the year. All right, so this also meets the criteria. If we go ahead and hop on over to their website here, just looks real generic and corporate. It says unlock the potential of the future. We are imagining, developing, and delivering a better future with our customers. Then it also says here complete lifecycle solutions. At Celestica, our complete lifecycle solution enables you to optimize your supply chain, help you meet local market challenges, and minimize field costs. So your in-house team can focus on innovation and growth. So just like I said, they're in the business of just improving efficiency in terms of your supply chain. So again, this is another B2B company, and this is another hidden gem in my opinion. Let's hop into TradingView and look at the levels. All right, so here we have Celestica pulled up in TradingView. Ticker symbol, as you can see, is CLS, and it's on the daily chart. I've identified this level here, $50.90 as like our support level. So this is the most recent low point. And then we definitely have support here because we have a David Banner candle, which means that it went all the way up to this area, respected it, and came back down. So support on this is definite, and this area is going to be 6107, somewhere around there. So that's our support level. Let's try out this tool right here. So let's go ahead and click on this just at the top of this candle and bring it down. All right. So this is telling me it is 6102. So that's the resistance level on this. Obviously, if it does smash through this level, it's going to continue to grow. But yeah, that's it for the video, guys. I just wanted to bring you these two stocks, let you put them on your radar. You can set your alerts based on the levels that we discussed today and determine if you want to enter into these stocks. They also both have options, so you can look at potentially playing that. These stocks are not as popular as, say, something like Nvidia as a tech company, so it's probably going to be a slow burner. So I would definitely look at swings, unless there's something like a triggering event like earnings that's coming up, or some kind of like acquisition or a deal or an upgrade or something like that from an analyst. All right, But that's it for the video today, guys. I hope you found this information useful. If you did, please consider subscribing. I make new videos like this every day, dropping gems to help you along your investing journey. Please go ahead and like this video. Also share this video with a family member or friend. And thanks again for watching the video. Y'all stay safe and have a blessed day. Peace.